Break down the markets right now and investing in this environment with Bernard Lirola. He's portfolio manager of the Needham Growth and Needham Aggressive Growth Funds. And Lee Munson, chief investment officer at Portfolio Asset Management. Gentlemen, it is nice to have you on the program. Welcome back to Closing Bell.
Thanks, Maria.
Bernard, let me kick this off with you. How are you investing right now? Where is the growth in this market and economy?
Well, I'm buying some retail stocks and some industrial stocks, particularly on the IT side, supply components type of companies. But basically, I think the retail stocks have a lot of leverage over the manufacturers. They have fewer retailing choices for the consumers to go to, so they're starting to offer exclusive items that you cannot find elsewhere, which helps them reduce price competitions. With regard to the industrial electronic type of stocks, they cut back a lot of the their costs, so they're very lean and mean. I think they have a lot of operating leverage when demand for inventory rebuild continues gradually.
Lee, do you agree with that?
But no, I probably want to ask Bernard, when you talk about buying retail stocks, are you looking at more at the discount retailers or more like luxury goods? And my second comment that I'm very interested in having Bernard answer, because I'm very interested in his opinion, is as far as industrial manufacturers, is he concerned at all that the recent spike is really about, increasing, dwindling inventories, or does he really think that we're going to have demand going into the next year, which I don't necessarily see?
Yeah, it's a good point, Bernard. What do you think about that? Because so far, much of the earnings surprises on the upside have been more about cutting expenses to get to that earnings strength as opposed to actual end market revenue growth.
Well, I'll answer the two questions. On the retailing side, I'm really buying the category leaders, the Whole Foods on the organic side, the Dick's Sporting Goods, CarMax, So I think these guys, during that recession, the weak have gotten weaker, the strong have gotten stronger. So I think the strong guys, number one people, be it on the luxury side or even the discount side, both of them will benefit well. Even if the consumer is slow to get back to spending. I think they have, again, a lot of operating leverage. With regard to the industrial side, I agree, Brian, with regard to the fact that so far it's been inventory rebuild, but I think we've got only one way in the inventory rebuild. In the last two quarters of, between last 2008 and first quarter 2009, there was absolutely no inventory addition whatsoever. So right now we have replenished the inventories to the bare bone level. As demand picks up and companies become more, prepared to meet that increased demand, I think inventories will increase.
Yeah, but the dry bulk shipping index is down about 50% from its highs from the summer. So,
Lee, let me ask you a question, because you say that RIM is the firm's really case study for what's happening right now.
Yes.
Research in motion. Tell me what you mean by that.
Well, this weekend after I saw the action in RIM, at Portfolio Asset Management, what we did is we felt that this was the case study of exactly the psychology of the market right now. Number one, not all bad news is going to be shrugged off. We think that contrary to a lot of the popular anecdotal evidence that there's still a lot of money on the sidelines, we think that most of the money for stocks, that allocation is in the market. So we think that when we look at something like RIM fall completely out of bed, nobody's buying on the dips, we would say that's a cautionary tale for anything that you buy. You need to understand that, buying on the dip is not going to work for everything. So we would rather look at defensive names. In the retail side, we're still long Walmart. We like things like Pepsi. We like Philip Morris. We like AT&T and Exxon. So we would want to urge professional and non-professional investors to look at RIM, put the chart on your bathroom mirror, and have it be a reminder that anything at this point can go down and go down big, regardless of what the index says. I think the index is going to be up in the next month, by the way, but you don't want to get rimmed at all.
Oh, God, that's true. All I need is the RIM chart on my bathroom mirror. My husband will really go nuts. I mean, that's all. As far as working all the time. No, but I get what you're saying. In fact, Bernard, you also like Walmart in the retail space, don't you? You also think that this is a stock to own for the long term.
Yeah, I think, they're insourcing a lot of the goods they sell, so they essentially integrating vertically. So that is a good source of additional margin in the future.
All right, gentlemen, great conversation. We appreciate it. Go ahead. You have the last word, Lee, please.
Seasonally, small cap should outperform right now. I think because of an 80% surge in small caps since the March lows. I think big caps should outperform going forward. And I think that dovetails into what Bernard is saying.
All right, we'll leave it there, gentlemen. Great conversation as always, and we appreciate your precious time tonight. Thank you. We'll see you soon.
Thank you very much.
Thanks, Maria.
Bernard, Lirola, and Lee Munson. Thank you.